Transitional authority. So in this training, I want to make sure that you understand exactly what transitional authority is. The SAFE Act was amended in 2018 with the passage of the Economic Growth, Regulatory Relief, and Consumer Protection Act of 2018 to mandate that all states implement something called transitional authority. Sometimes they will refer to it as temporary authority, but you'll mostly hear it as transitional authority. This is for MLOs, mortgage loan originators, that seek to become licensed in other states, or MLOs that want to move from a from an FDIC insured bank like Chase, Wells Fargo, Bank of America, to a non-bank lender like some of the DBO companies. Sometimes you have people that work at the traditional banks and they want to move to be like what we're doing, to be a mortgage loan originator, to either work in real estate with the broker or to work at a DBO company. So they get to enjoy the benefits of what's called transitional authority. Individuals are allowed to originate loans while completing any state-specific requirements for licensure, such as education, testing, for up to 120 days while they're applying for the state agency for their new license. So what this means is these individuals that want to go through transitional authority, say you want to operate in another state, and that state requires 3 hours of education. This means that you can operate in that state once you apply for 120 days while you work on completing that education. Say you want to work in Nevada and you apply for Nevada. Well, Nevada has 10 hours of additional training. Transitional authority would allow you to operate and do loans in Nevada for 120 days while you work on completing those 10 hours of training. So the thing that you want to remember is how long or how many days is an MLO able to operate under transitional authority? 120 days. Again, also for individuals that are moving from an FDIC insured bank, Wells Fargo, Chase, Bank of America, any of the main banks, to become a licensed mortgage loan originator, they're moving from becoming registered to becoming licensed. They can operate as a licensed mortgage loan originator for 120 days while they work on completing their 20-hour class, while they work on passing the test, while they work on completing any state education. They can apply for a state license and they can work on those things while they transition from registered mortgage loan originator to state license. Again, the part you want to remember is the 120 days. Temporary authority can be awarded to qualified MLOs who are changing from a depository institution to a state licensed mortgage company, and qualified state licensed MLOs who are seeking to become licensed in other states. Temporary authority, sometimes called transitional authority, 120 days. 120 days.